Kind of a sluggish start to the week, but that could be just fine. As I've said before, a healthier rally might actually be a little bit of a slower one if we're not going to have the super high-octane valuation appreciation that was the AI trade. That's the part of the market that still looks sluggish, and what I ended on last week with the risk radar having the green light on stocks, the big major caveat and the string attached to it is that even though the SPX is trending higher with the higher high and breakout, so the green light's got to be there, there is a big string attached with the NASDAQ and the chip makers. As those charts get weaker, the further you go in with NVIDIA under 120 and the chips still in arguably a toss-up trend scenario. I'll get to that in a second. The yellow light on bonds also reflects some important changes from last week in the aftermath, the response to 50 bips. But overall, I'm feeling like this is a decent place for the risk radar start this week. I know the haters are upset that the red light's on crypto, but I mean, I'm just looking for Bitcoin to get above like 66 and hold it. It's not that big of an ask. Here are the 4 charts that I'm looking for. 10-year versus S&Ps. Don't know how many times this needs to be said, but it's important. Since the Fed, we put the bottom in the yields on Tuesday. Stocks have risen. Yields have risen. This is not terribly hard to figure out and continues the trend here for really the better part of a couple months, kind of going back to the summer when we started getting a little bit worried that the Fed was going to have to cut to save the economy. The debate now is, of course, that maybe we're cutting out of celebration, out of victory. That's kind of what the Fed told us, basically. So you want yields to go up. You want yields to go up for stocks. If stocks have a problem with yields going up right now, that's not the bond market's problem. That's a stock valuation problem that probably comes back to tech. But for now, generally, stocks have shown us they want better than expected data, which we've been getting, which means you want yields to go up here because the Fed has also juiced the economy effectively with the 50 bips, and that should give us some better growth expectations. So chart number 2, again, this is kind of painstakingly pointing this out as I have before, the chart of the 10-year versus the spread. What was important last week is that we saw the yield curves opening back up, including, of course, the Fed-controlled 10-year to 3-month, which matters a lot for the academics on the yield curve analysis. But just for now, using the 10s to the 2s again, we have been bear steepening since Tuesday, given that yields have been going higher while the 10 to 2 spread has also been going higher. It's a different type of yield curve than the one we got going into the Fed, which was the bull steepener as people were buying and buying bonds. So again, today, stocks grind their way higher and have an up day as yields are up too. And I think that's important. That might be a more sluggish version of the stock market, but it's probably one that's more tied to real economic outcomes and doesn't depend on tech as much. So I think you can keep rooting for that, and the green light will hold particularly well if stocks rally when bonds are selling off and yields are going up. Now, kind of the problem areas here. Tech and semiconductors. Important week around Micron, because Micron is one of these stocks that does have earnings late in the season, and right now seems to be debated among analysts how much of the AI trend it's going to get. And the semiconductors could really use a nice fresh rally somewhere. NVIDIA's under 120. The SMH chart we're looking at here still has very clear lower highs. I described it last week as the beating heart of the bull market for the past year. I think that's indisputable. It doesn't have to be going forward, but if you do get the semiconductor breakout, then that's going to be the more intense type of rally, and that hasn't happened yet, which makes me very, very wary of this chart. You don't want to see it turn south this week. Also, Bitcoin, back to the crypto thing. Still a downtrend. You got lower highs, you got lower lows. Couldn't in good faith have anything other than a red light on this unless we get above the previous high. So for BTC, you get above 65, call it 66 and hold it for a session. Then the yellow light goes on BTC. Green light at an all-time high. I think things are pretty reasonable here. Have a great night.